right, good morning, everybody. We're back at it again. So I wanted to point something out in terms of the previous week's high we were talking about yesterday for the DXY getting attacked. That was our draw on liquidity yesterday, and I just want to point out the fact that we went right to it as expected. Alright, price pushed up aggressively. Price ended up piercing that previous week's high, which is one of the things on one of the liquidity pools on the list I gave you guys. Alright, so what does that mean for today? Well, as always, we gotta go to Forex Factory. We have news at 5:30, so we got 10 minutes until some stuff comes out. If nothing happens, because there is a news event at 7 o'clock, if nothing interesting occurs, then we'll end up waiting for 6:30. Remember, trading before 6:30 or 9:30 open Eastern time, you're trading before the manipulation. So you want to make sure you keep that in mind. Y'all let me know in the chat if y'all could hear me okay. And be appreciated. Looks like it's good on my end, so yeah, we're gonna wait till 5:30. We're gonna see what transpires. We see that the SMT formed. We see that there's SMT at the lows too, but we see pretty obviously that the Dow is freaking tanking, and it's Thursday. So remember, the weekly power 3 is something you got to pay attention to. I appreciate you, Jones. Appreciate you. Appreciate you. Appreciate you. I appreciate you hopping on too, bro. So yeah, like I was saying, the previous week's high that I pointed to throughout the session yesterday, obviously that came to fruition. And although the intermarket relationships were a bit skewed yesterday, we were still able to find a beautiful opportunity. We were still very patient, and I took 2 trades, one in the NASDAQ and one in the S&P, which I showed you guys, and it all came to fruition, right? We didn't need a home run, we just needed a base hit, and we ended up getting 2 base hits. If you were to participate, again, this is not financial advice. And whoops, I have to show this real fast. So yeah, with that out of the way. So yeah, we were assuming from yesterday and just well into the previous week that this was going to occur, that the bonds were going to drop. If we look at the weekly chart, we can see too, again, you go from high to low. It looks like price just, let me clean that up. It looks like price literally just went up into this fair value gap, which was above equilibrium. Okay, so from high to low, you measure out that range. That's the most recent energetic swing high, most recent energetic swing low that ended in the retracement, and price seeked. Why was this one not used, and why was this not effective? Because price seeks premium. Okay, it likes premium arrays more in a bearish market. It likes discount arrays more in a bullish market to then, present an opportunity, because they're selling high, and then if they were going to buy, they want to buy low. Where's high and low in terms of a given range? It's above equilibrium is high in a bearish market, below equilibrium is low in a bullish market. So smart money, that's why they seek very specific PD arrays, and that's why certain ones get hit over others, right? That's why this one was not fully respected, right? It bounced up, broke through, got up into equilibrium, then it decided to go down. Alright, so we can get rid of this, we can get rid of the previous month's high. We can actually move this down to here, because it'll be more relevant, but I don't think it's even going to be used, in all honesty. It's going to end up being a previous month's high in probably like the next day or so. But yeah, so prices pretty much dropped. We got below this inversion fair value gap. I have deep conviction, at least from this point in time, that price may retrace into this fair value gap and then present us with an even deeper drop to keep going lower. And then this obviously should coincide with that and basically give us continued moves higher to come up and possibly seek this as a draw on liquidity for this higher time frame weekly chart. Right, that's what it looks like it's going to do, just like over here, how it broke through this fair value gap. And I want to see it retrace possibly and then continue going lower. It's the same with this. It broke through this fair value gap, that's on the daily chart. And I want to see that act as support and then continue going higher. We have an order block here too to pay attention to. And I believe this here, yeah, this here is a volume imbalance. Right? Hey, can you do me a favor real quick? Do you hear music in the background? And if you do hear it, is it too loud? Just want to make sure that it's not going to be too loud before we continue.
No, you're good, bro. No worries.
Solid? All right. For sure. Can you hear it on the stream?
Let me check right now.
Yeah, just double check real quick. Got some of my private community students on the Zoom call. About to share some insights with you guys as well. Good morning, you guys. By the way.
Morning. Yeah, sounds good. No worries at all. You can honestly barely hear the music, but it's all good, bro. It's better
Okay, that way. Yeah, I want it that way. Just a little bit in the background.
Yeah, you're good.
All right. So again, we have this volume imbalance here. We've blown past this fair value gap, and again, we want to see price potentially use this as support to continue going higher. Nothing here has shown us, unless we get down below this low, nothing has shown us that bearishness is of interest, which means DXY, we're not interested in deep convictions that have to do with potential sell side for the DXY. We want to see it continue to show us reasons to go higher. We have had basically a bullish power 3 so far, and it is Thursday, so we have to make concessions for the fact that also it's the end of the month. It's literally like the last day, so things may not have too much excitement. We are going to use the news events to try to gauge that, but we've already taken this. Prices now came into this fair value gap, so we want to see what's going to occur here. We've taken sell side here. If it would have left equal lows, I would have probably been thinking that maybe we could go down there But because we already took out the sell side, prices now seek the buy side. We have a new range of opportunity or new dealing range. So this is now our dealing range. And if it is to retrace, we have an order block here. All right. We have another inversion fair value gap. We also have this weekly inversion fair value gap. So if we're going to continue to be really bullish, ideally I would like to see it respect this and not even come down to the discount down here. I mean, this was almost as energetic as this, but this seems like it was a little bit more one-sided. So we can potentially get a range from here and possibly use this as the optimal trade entry level. So that's something to consider as well. If we do see buys, this may play a role in that. This adjusted framing in terms of the most recent, most energetic price leg that pushed the move to this previous week's high. We don't want to lose, obviously, we don't want to lose focus of the fact that this is the actual equilibrium though. So below that is a discount if you're using the full range. But if you want to try to narrow it out and go to where the most energetic part of the price leg was, to maybe have a adjusted potential optimal trade entry level, you could do this, right? This is the most recent energetic one that attacked the buy side. So it could potentially use this. And that's justification for whether, that's justification for if price doesn't want to get down into this level and it just continues. We also, of course, use that in conjunction with the inversion fair value gap, right? So these are just some like identification tactics that are helpful, because sometimes price doesn't want to go to the full discount, and then you sit there wonder why. But if you just move the fib placement to the most recent, most energetic part of the price leg that pushed it to a liquidity point, generally that'll give you some insights and show you. Also, you couple that with near-term PD arrays that may be in close proximity, and sometimes that's the reason why it doesn't come to a particular level. But yeah, so 530 just opened, so let's go view what is happening. So I'm trying to see if DXY is going to want to continue to go higher, unless of course we see today act as a retracement for the yields and retracement higher for the bonds. That would give us reason to see DXY potentially dig a little bit further to the downside. We have a full range capacity for the fair value gap from here, right? So we have a good amount to consider, and obviously it would still stay valid. Now, if we get down below this swing low, that's going to change my perspective. Again, I marked this off yesterday as equal lows, which it still is. So it does have the chance, if it does break through this fair value gap and it does stay, showing weakness, and if that's confirmed with bullish bonds and then this bearish retracement for the yields, then that would pretty much be the narrative to basically push price to possibly continue to seek sell side. I don't want to see that happen, obviously. I do want to see eventually us possibly get up into this. This is way too obvious, way too freaking obvious. And now we've dug so deep into a discount, swept out a bunch of liquidity, and now prices basically shifted market structure here. Once we get above this high, if we do get above that high, I'm confident that, of course, we can hit this, but eventually try to seek this buy side liquidity pool. Because again, it's so obvious, and they failed to get up there on purpose. Generally, that's the case when you see this type of stuff. But yeah, we also have SMT at the lows and the highs for the indices. The Dow obviously is showing some serious weakness, so that kind of makes me really favor seen a potential narrative for DXY to try to turn around at some point. But we'll see, right? So we have SMT at the lows, SMT at the highs. So whatever DXY is going to do, that's going to give us further justification for whatever direction or whatever SMT is going to be respected. So again, just like yesterday, we got to be patient. Just because the news comes out doesn't mean we have to take a trade right now. As I showed yesterday and in the previous lives, you don't need to worry about missing a move. There's always a move. Just keep your head in the game. Remember your model and spot your model performing as price delivers, but keep in mind also the higher time frame direction and different liquidity pools. In this case, there's previous day's lows here, right? This previous day's lows here. Previous day's high was taken, also in conjunction with the previous week's high. So now liquidity's been engaged, so we'll see what it's going to do from here. If we're going to continue going higher, we want to start seeing respect to these levels, right? We don't want to see this 8-hour fair value gap get smashed through. And if it does, and then eventually takes this out, obviously sell side will be on the menu. Right, but and then of course that'd be confirmed with this potential retracement. It may look to retrace all the way up to this breaker, right? It may do that and then give us short-term DXY bearishness as a result. But we'll see. Again, it's the end of the month. You don't want to be reckless and try to force your hand, especially since we've had a pretty decent week already, pretty decent past couple weeks, right? So we have to make sure that we are looking to preserve capital and keep the money we make, because again, like I said yesterday, it's not about how many trades you take, it's not about how much money you make, it's about how much money you're able to keep and your ability to have that process consistently, right? A person that makes 5% or I mean 0.5%, like with 80% strike rate consistently, is always going to outpace eventually someone that's trying to hit 50%, 100%, and hit these home runs like every single day while they fail, right? It's just, it doesn't even compare. And that type of perspective, accepting that type of perspective, is a massive benefit when you're actually looking to be consistent, to turn this into a reliable income, right? The opposing view is obviously reckless and doesn't generally end well. And the market victimizes those people that think that way. I need a home run. I need my full target, right? Like yesterday we talked about partials, taking partials. We layered different levels and discuss why that's important. Yes, you want to take trades. Maybe if you take multiple contracts, right? Maybe you can take partials at each one of the levels you outline. But if I was you, especially trying to get a grip on consistency, you want to make sure you're taking the near-term targets, the closest possible logical targets, to start building up that level of consistency, because you don't need much to be able to replace a job. You really don't. But you do have to have the right mindset, and that's the hard part. So yeah, again, yesterday I discussed for bias, this order block here, the midpoint of this order block is significant. If we close down below that, we could potentially see price obviously continue to go down and attack this. What kind of low is this? Can you guys tell me? What low is this? Based on the list.
Is that a weekly low?
Yes, sir. It's what kind of weekly low?
Hold on.
Remember, this price action here, this is our current week, right? And this is our current week high, current week low. So what does that make this?
Oh, the previous week low.
Previous week's low, exactly, right? And obviously, just like yesterday, the DXY attack is previous week's high, uh, and we're kind of still trading inside this range, so we have an inside week. So it's not really doing much, just signaling things are a little more difficult. It's one of those extra signals showing that things are a little more difficult. If we're inside the same daily candle from the previous day, that's called an inside day. And that generally gives the sentiment that things are consolidating. And remember, what I've been talking about the last couple of days, it's the end of the month. So generally towards the end of the month, they try to pause and wait, right? They try to come back and just try to settle in at a particular price level, and they don't really do too much, potentially setting up more liquidity for the next coming month, which starts the whole power of 3 opportunity all over again as well from a monthly perspective. And then obviously inside that, each week, all 4 weeks has a weekly power of 3 dynamic, and then inside each of those days during the weeks, there's power of 3 for the days, right? So you start breaking things down and seeing things from that perspective. It's pretty helpful. But yeah, if you see an inside week like this, once it starts acting like that, that's sharing insights with you that it's going to be not too crazy. So just, you got to be more patient and proceed with caution, right? But yeah, so we have SMT here. Like I said, we have a very heavy Dow.
I'm not sure, Christian. Sorry, I'm not sure if you actually have if you notice the S&P on the indices as well, on the lows.
Yeah, right here.
Mm-hmm.
Yep.
That could be like a little bit of a confusion just to see what
Yeah.
happens.
Yeah, so remember, when we have two SMTs, we have to use the DXY to confirm which
Yeah.
one is going to be potentially trusted. Most of the time, that relationship comes into play and provides more clarity, right? But right now, DXY is essentially falling. We're still inside the possible narrative that price is going to continue going higher. And when does that become invalid? We have an inversion fair value gap. We have a fair value gap here. And we have this swing low and a volume imbalance. So if price was to smash through that, that's our validation process, right? Otherwise, if we use this fair value gap here and this inversion fair value gap as support, this weekly inversion, and then also this inversion fair value gap, if that gets used as support, then that's going to support the idea that price is going to continue going higher. Right? We also have now this order block, so we have another potential validation area, which in this case is the midpoint of the order block. Which is right there, right? So that's another thing to keep in mind. Let's go to the 2 hour. Right, so depending on how these things behave, how price behaves at that level, and inside this fair value gap, today. So depending on how price delivery is around this area, it's going to pretty much determine, at least in my opinion, what's going to happen. And it's probably not going to be nothing really, like I said, significant, because it's already the end of the month. They've already done their damage, right? It's been, 1, 2, 3, 4. Yeah, so price basically showed a bearish candle. If you look at this, these 4 weeks is a monthly candle, right? So the open, right, was here. Price wicked up for this monthly candle, and then price dropped lower. So it was a bearish power 3. So it was a bearish monthly candle for the current candle. And if we go to the monthly chart, we can see that was the case. See? So that's just like a little insights in terms of the importance of being able to observe a higher time frame perspective when you're looking at lower time frame price delivery. Helps you kind of navigate a little more, as we've discussed a couple times before. But so yeah, that's essentially what I want to see with the DXY. We don't really have any like too crazy liquidity areas, I guess you could say. We do have this fair value gap above us, and we also have this wick. So remember, when we see wicks like this, we got to break them down and then use those levels as potential targets. Right? So what from this price delivery will validate us continuing to trust going higher? Well, of course, we want to see the yields go higher, right? We want to see them retrace, not really do too much, and we want to see it go higher. It may not, right? Like I said, it may chill out, but if we do start seeing yields go higher, bonds go lower, we would like to see DXY then shift market structure here, get above this fair value gap we have outlined, and then continue to use that as support as it presses higher. And then if that is the case, my daily target would end up being these quadrants, any of these quadrants, whether it's the first one, second one, third one, fourth one, so on and so forth. Right? And then after that, of course, it would be potentially this. And this, again, this is a previous week's high. Right? This is another previous week's high. And this is another previous week's high. You see how helpful this indicator is for the separation of Sundays? It's very, very helpful to quickly see previous week's highs as well as previous days highs, so on and so forth. Previous month's highs too. Oh yeah, this is actually a previous month's high. The hell is it? Oh, there it is. And then this here is also the monthly low. I already have it outlined. Again, we have this equal low here. So if we do see price show weakness, we'll probably get down below this low. Again, we're ahead of the 6:30 time. It looks like from what we're seeing here, price is going to open at 6:30 off the low and basically open at a discount. So opening at a discount is pretty, I guess, helpful when we're trying to look for price to go higher. But again, it's been bullish all week. So Thursday has now presented a retracement, which is typical, right? Because remember, when we go into Thursday or Friday and we hit a higher time frame PD array, generally that signals potential for the retracement or TGIF. And what happened? Price got all the way above this high from Tuesday and Wednesday, and then price has now rejected away, presenting a retracement back into the range from this high to that low. So now we're hovering around equilibrium, hovering around the midpoint of the 2-day order block, also inside this inversion fair value gap. So yeah, like I said, a key element to the weekly range dynamics and anticipating Thursday, Friday reversals is when this happens. When price hits like an order block, which it also did here as well. All right, so it not only hit a previous week's high, but it also hit a order block, and then obviously rejected using the Thursday reversal characteristics. And it looks like it's not going to slow down, right? But we'll have to see. And then of course that's going to impact this with either, bullishness or maybe if DXY turns around and starts to go bullish again, we'll see this as just a possible retracement to go lower and follow suit with the Dow. But for right now, if you look at price, if you go from this low to that high, we're in fact in consolidation. So it's kind of stalled out, right? It doesn't look like it's too excited to do anything at this point because we took this high or took this low. Now we took this high. So this is a bullish power 3, but technically we've taken sell side and buy side. So this is also showing us seek and destroy characteristics at the end of the month, which again, these are multiple signals in terms of possible consolidation, possible harder to read than normal markets, right? So you got to keep that in consideration when you're thinking about risk today, as well as, how you're going to engage. Very important. Yeah, it's pretty much what I see in the DXY. We have this fair value gap. We don't want to see this low break if bullishness is going to continue. If it does break, then obviously we could potentially seek this low, or potentially maybe this monthly low. But I would like to see us continue to follow the sentiment of the bonds and the yields, which in this case has been possibly bearish for the bonds and then possibly bullish for the yields to continue, and then eventually hit this fair value gap and this previous month's high. But yeah, so we also have this previous day's low. That's in conjunction with these down candles, which was an order block we outlined yesterday. So it could reach down into there, and that's, in my opinion, would be pretty high probability once we do get down into that level to see price catapult and continue to go higher, because then that would be basically price sweeping liquidity, shift in market structure. There is an impulsive move higher, breaking more highs, leaving a fair value gap. So if price retraces back in there, just like if this was the 5-minute chart and this was in New York session, this would be potentially high probability for price to continue going and attacking highs, right? Specifically at this potential area. And if you measure out from this low to that high, that's also a discount array, right? Beautiful discount array. Completely aligned. The high of the fair value gap, and then below that, that's also below equilibrium. Fascinating how things line up, huh? But yeah, if that is the case, again, we pointed out this breaker. So price retracing up into this breaker would basically be a similar idea to this retracing down into this fair value gap and this order block, to then go higher and then obviously go lower with the bonds, continue the overall trend. But yeah, so does all that make sense? So we can now move on to the indices. We always got to get that out the way because that's our lay of the land, right?
That's it's all cool enough.
All right. What about you, Nico?
Yeah, no, it's all good, bro.
All good? All right, for sure. All right, so moving along. Again, we know what we want to see for the DXY. And if price does not respect this fair value gap and just, keeps blowing past it and gets below this low, I'm not really in the mood to trust buys to continue, because if it breaks that, it could seek the lows, or it could just again consolidate because we're at the end of the month. But that's the thing, we may need the news to instigate some type of reaction to go in whatever direction it's going to go into. So it's all just a waiting game. And again, even with the news coming out that's ahead of us, it still may be a little choppy or harder to read. Just like yesterday, right? It was a little difficult to read, but we eventually figured it out and we're able to participate. So I'm expecting something similar to that today. But our overall target was met yesterday as well, so that's always good. So yeah, moving on to the indices. Yeah, so I see DXY dropping pretty aggressively still. So I'm gonna be curious to see how that's gonna respond. So yeah, we still got SMT at the lows, right? And we have SMT at the highs. So again, DXY is going to determine whether this is going to be ready to do a deeper fall. Also the yields, obviously, because these in the bonds, these dictate what's going to happen across the board. So again, we still have SMT. The Dow, right? The Dow's kind of showing us potentially what is to come for the other indices because of this extreme weakness on, I think it's the weekly time frame has the SMT. So remember, parent time frame, parent sentiment is generally the most important. If we go to the weekly chart as well, we can see that this is a weekly fair value gap. So that's pretty significant too. So let me copy that. Oh, kind of already tapped into part of this fair value gap, at least on the S&P. Yeah, these consecutive up candles too, what do those turn into if price breaks the low?
An order block.
Exactly. You can see how this was an order block as well, and it was delivered to and then came off the high. So this is the monthly candle here, which is wild. So this is basically what the month delivered for the Dow. Went all the way up just to reject. This is basically a rejection block, right? There's a high over here, higher high in the middle, right? When price came back into it, it just tapped into it and rejected off. So that is a rejection block. So yeah, this just doesn't look too too tasty for anything bullish. This looks bearish, right? And so does this. And this, when this breaks this low, this will also become a mitigation block, right? You drag this out. The lower high, if it was higher high and it broke through that, that'd be a breaker. But because it's had a failure swing, it's a mitigation block. So yeah, because we see what we saw in the Dow, because we have SMT at the highs, if we see DXY obviously continue to go higher, that'll confirm and justify potential continued bearishness. But we're going to have to see what takes place, because if this continues and if it disrespects all the stuff in this area, and if that is then confirmed with the bullishness in the bonds, bearishness in the yields for the time being, at least until we get up into here, then our sentiment would be obviously seeking sell side for the DXY. And we have potential targets for that as well, which is, we have this volume imbalance, we have this previous day's low here, and then we have the current weekly low as well as the wick. So we'd break that down to get extra targets as well. And we pierced the high, and now we've come off that high. So because these consecutive down candles here, right, we're starting to break through that midpoint, so it's gonna pretty much invalidate this order block, which then promotes us potentially viewing an idea to go down below these lows. So that's something to consider. But yeah, you look at this consolidation here, it's an accumulation, reaccumulation, smart money reversal after we take out the buy side. So this can also potentially be performing a market maker sell model if it is going to have sentiment to go to the downside, right? So we'll see as the news takes place later this morning what it's going to actually choose to do. So yeah, watch what happens with this this 2-day order block. See how that's going to respond. Yeah, let's come back to NASDAQ. Just remove some of this stuff. So yeah, we got this fair value gap here too for the DXY. This again is an order block. This is a bullish order block. Also coupled with the fair value gap here. So that may be an interesting place to watch for a reaction, especially if DXY wants to show bearishness now. Right? If there's things that can justify the bearishness in relation to the yields, right? Like if the yields continue to rally, continue to fall, and then the bonds continue to rally. If it breaks through this breaker and doesn't show any respect to it, then obviously the sell side could be considered. But for now, I mean, if you look at the 3 PDA rule, right? Given the fact this has been bullish, the 3 PDA rule is still intact, right? There's 1 fair value gap, 2 there's the order block, and then obviously 3 would be the lows, and they've been respected thus far, right? And then obviously the yields have been promoting, the bonds and the yields have been promoting the price delivery we've seen, which was attempting to be bullish. So we'll see if that changes, right? But for now, it looks like, we can still potentially trust this trying to go higher. Coming back into the range right here after bullishness has happened is not it's not random, it's not surprising, because we hit a premium array going into Thursday or Friday, which then promoted the TGIF retracement or Thursday reversal, right? So so yeah, with that being said, let's take this, let's go to the 1 hour. So yeah, we do see that this is like a relative equal low here. So now price looks like it's, you go from high to low. If DXY was to rally, like basically respecting the levels that we discussed, like if it does show it wants to bounce, if you take this high to that low, price is basically retracing into the fair value gap. Now if this high breaks, if this high breaks, along with I thought there was an order block there. There is one there, but again, if this high breaks, and then DXY continues to do this bearishness, we're gonna potentially aim for the highs here. If you look at price, we're in consolidation here. So for anyone to hold on to a bias too aggressively, that's ill-advised, because it can, we've painted a picture for it to possibly go lower with a bullish DXY, but there's also a reason to potentially think that it could still go higher, because if DXY continues doing this, that's all. They're both possibilities, and that's, you know, it's just part of what happens sometimes. But for the most part, we've been looking for this to be bearish because of the bullishness, and that came to fruition just as we have anticipated. So now we're at a moment where we're going to have to just let the market speak and continue our patience and being disciplined, so then price can give us the information we need. So yeah, we also respected that 8-hour order block yesterday, as we said. So we can see that this is a inversion fair value gap 2 that's being attacked. So yeah, this wick up into this fair value gap, let's see, is there, so it's basically SMT going into the fair value gap, because this has failed to reach the fair value gap. Okay, and then the Dow also has failed, at least for the time being. So that's something to note. So yeah, let's watch and see what this 2-day order block midpoint does. Whether that holds in this order block as well. Just gotta see what that's gonna do. There's also one right here too. So we'll see. So something to consider as well. If we do get this bounce higher, right? We mapped out if it's going to sell off, this could be a market maker sell model framework. If it does not sell off, if it does choose to rally and fail to do that, then if you look at the lower time frame here, this is a consolidation. Then you can map out the accumulation, reaccumulation, possible smart money reversal to go higher if it is going to try to continue back in the direction in terms of bullishness. But you know, we got to just see what it's going to want to do. There's no hardline bias right now. Obviously, it's the end of the month. We're in consolidation for the DXY. It's just bouncing back and forth. We also have basically consolidation for the time being within the indices as well. And we have news events coming in about 23 minutes. So we'll see what that does for us. We'll see if more conviction towards whatever direction pops out. It's all a waiting game, right? Y'all got any questions while we wait?
At the moment, no. I'm good. The bonds and the yields especially are dropping hard still.
Yeah. Remember, we have the idea that it could potentially come into here, and that would still pretty much be valid. So we got this inversion fair value gap here. We also got the order block. see what's the best one. I guess this is definitely something we got to consider here. Right, so let's clone that. So yeah, we're gonna want to keep tabs on what that's gonna do. Because I mean, you can see pretty well that this could retrace down into that order block and then give us that huge expansion. This is a pretty hard move off of this order block. But again, we have this breaker here on the daily that we have to see. If it breaks through the breaker there, what's our 3 PD arrays, right? 3 PD arrays would be this inversion fair value gap, this breaker, and this fair value gap. So if it was to smash through that, that invalidates the bonds going lower. You see how this 3 PDA rule makes it a little easier to validate and invalidate a potential direction? It makes it a whole lot less like guesswork, right? Makes it more obvious in the most simple possible way. So yeah, I'm still feeling like, I mean, we got trend line liquidity here. We have an untapped fair value gap. We would just have to see the bonds start to fall. DXY, I mean the yields, we'd have to see show some support. Let me go see, is there SMT at the... There's not really any SMT here. What we do see here that's kind of interesting is this equal high. We've now set pretty obvious equal highs here as another target. But again, we've also hit this order block as well. That's instigating the retracement. If it is bullish, this is a beautiful example of finding counter trend ideas and framework. Price has been bullish. If it was to stay bullish still, the fact that when price hit this higher time frame PD array, and the fact that it started to retrace and we have a fair value gap below, that's a wonderful counter trend framework inside of a bullish trend. This is how you get high probability counter trend ideas. When you see a trend that's obviously moving, and then once that trend hits an order block or a fair value gap opposed to your bias, and you can see something that once it reacts from that level, you could see something down below price where it would possibly continue to set up the actual bias. That's literally the easiest way to map out counter trend high probability entries. If people are like counter trend traders, it's a beautiful way to develop a model around that particular topic. Because inside this, I guarantee you, if I was to go to the 5-minute, this push lower, there's obviously going to be some type of move that occurred. Using the framework as, this order block creating the possible retracement to then target a discount array, whether it's this low or this daily fair value gap, to then continue going higher, or this order block, right? Similar to this. Right? Does that make sense?
Yep.
Beautiful. All right, so it looks like we're going to be pretty heavy and just continue this market maker sell model potential. I mean, you could technically look at this as consolidation. accumulation, reaccumulation, which did line up with the right side, and now this could be the second stage distribution. So if this pushes through this really quickly, then that is basically what we're seeing here. After the previous week's high was taken, the smart money reversal. Another thing to note, if you're trying to learn market makers buy and sell models, smart money reversal generally performs at a PD array, just like this, right? How it went up into this daily fair value or this daily order block. If this was a market maker sell model that we looked at on the lower time frame, when price got up into this higher time frame level, that's generally where a smart money reversal form. Right, hypothetically thinking that we're going to be bearish. It's just like the topic and the perspective I want you guys to pull out of that. Smart money reversals happen generally at PD arrays. Right, the original consolidations sometimes happen also at a PD array. Like say price here pushed down into a daily fair value gap, but we're bearish, right? Price rallied up, it went up to attack a previous week's high and a premium array to then drop, right? And then potentially continue attacking the sell side. So that would be how you would identify a possible, daily retracement to continue in, let's say, like a bearish trend. Because this is a full day here. So this is a full bullish daily candle. Now this is a full bearish daily candle. Inside those two daily candles, when you break them down using market maker buy and sell model frameworks, you can start to get a real serious detailed feel for what price is doing and how you can participate using those two daily candles. And then of course you couple the liquidity pools that I share with you guys all the time, and then that I've recently shared on the YouTube channel. You guys can really start to see how you can piece things together pretty well. Alright, so let's see. Again, if we get this rejection, right, if price still shows respect to this fair value gap that we've been watching, this here could be, remember this was the fair value gap the price retraced into, and we're still looking to be bullish, right? Things have just attempted to retrace, right? So nothing has changed just yet in the overall higher time frame narrative. So this here could just literally be retracement from high to low on this daily chart, or I think it's on the 1 hour actually. Yeah. So from high to low, right? We have relative equal lows here, but this is another previous week's low, right? Then we got this wick. So this could easily be a retracement from high to low, coming up to a premium array to then decline. This is also an order block here as well. Look like an order block. Guess not. We do see this down wick here. You guys know what I talk about, or you know what I point out all the time when it comes to wicks. You know how much I love wicks. I talk about them all the freaking time. The 50% as price delivers helps you identify, right? Same with this, right? Helps you identify when price is delivering. And large down wicks when price retraces, or large up wicks when price retraces into them in a bearish move, they act as premium arrays. In this case, you may be seeing that in full effect, especially if we end up falling. That'll just be more amplification to the validity of that idea and the importance of wicks. Oops. So yeah, now we got that level to pay attention to. So let's go to the 15-minute. I believe this was the an inversion. Was it from the daily? It's from the 4-hour. Yeah. This is from the 2-hour. It's another inversion fair value gap. So yeah, something I really like that I just saw right now. If we go to the 1 minute, look at how obvious this has set up. Look at that. So if we continue to respect this FEG, right, this fair value gap that we've been identifying, this blue box, which I think is a 1 hour, 4 hour maybe, yeah, or it's an 8 hour fair value gap. If we continue to respect that and we come off that low, that's still also inside the 50% of the 2-day order block. So that's also all the layered situations for possible support. And then if we can get that confirmed with, maybe the bonds not trying to break through this, maybe this will fail to get down below here and just continue to go higher. If all that occurs and DXY goes higher, then obviously we'd be able to completely trust the continued bearishness. This consolidation here, also, leading up to this retracement going higher, if we break down below this low, this has the possibility, especially if DXY rallies and attacks these highs, this now also becomes a possible market maker sell model framework, right? Because remember, price goes from a low, in this case, it attacked liquidity here, so it ran out of liquidity on the daily in the daily candle, right? It's just basically retracing, right? The open was here, so this is a wick for the daily candle, and then we'll see if the day ends up being bearish. Inside that potential bearish daily candle, this could be presenting a market maker sell model, right? And you could kind of see the elements of it, right? Consolidation, accumulation, reaccumulation, possible smart money reversal below this low, which then also becomes a breaker and an order block. And then we could potentially see price use this level. I think we would look at this as the possible second stage distribution level, right? So if this was to continue to drop, anticipation for this to be first stage distribution, and then once it's down here, second stage distribution, to then potentially continue its run lower and maybe attack these engineered equal lows on its way to the previous week's low. Does that all make sense?
Yes, sir.
For sure. So those are just some thoughts that I got. We do also see these equal highs here. So if DXY was to continue being weak, right, the contingency plan for basically assuming that this doesn't play out the way we're looking for it to play out, the draw on liquidity would then be up here. And then, potentially some of these upper targets if that is the case. We also have equal highs there too. So yeah, preferably I'd like to see this continue being bullish, attack these equal highs here on the DXY, which would then give us the opportunity to possibly frame this as a market maker sell model to continue attacking lows. But if that doesn't occur, we can make adjustments and then possibly seek this up here. Damn. Alright, so another thing we want to pay attention to before we get this open. What the hell's going on? Why is this so far? Yeah, so if this high gets broken and DXY continues to fall, we also got these consecutive down candles here, and we can consider that as a potential order block. It's not really showing up that clean in terms of that though.
Yeah, that's what I have at the moment. I'm just watching to see if it breaks lower than that for us to continue going lower, or if we're going to respect that area and then most likely break the high and maybe continue into that consolidation. Yeah, exactly where you had that marked.
Yeah. Looking at this area here, right? This area here, as well as this area here. If this doesn't play out, right? If it doesn't break this low, then this could potentially also be viewed as a potential area for a market maker buy model above this consolidation.
Yeah. Exactly, yeah.
Because this would be first stage accumulation and first stage distribution, which looks like it was pretty beautifully respected. And then once we get above this, it could possibly return down into that, and then also try to aggressively press price higher up into these further buy side liquidity targets.
Exactly.
See, I'm sure the open or like just the opening range itself will most likely give us a whole lot more views in terms of what it's going to actually do. Again,
maybe by silver bullet, it will be good.
Oh yeah. And again, silver bullet time. There's news, so that could very much be what's potentially going to take place. We also have this regular trading hours gap right here. Right, if we measure this out, so the high. Okay, then we just separate that real quick. See, we got a regular trading hours gap here. Is that it? Yeah, so got this regular trading hours gap here. Again, if the XY continues to tank and the yields go lower and attack this low here, or this fair value gap here, and then we try to get up into this breaker, obviously that paints a picture of bearish DXY and then bullish indices for the day. Right, so that's like pretty high level lower time frame price navigation, obviously in conjunction with the higher time frame views. Right, in this case, it looks like everything's pretty much doing its own thing at this point. The Dow is aggressively selling off. The nasdaq's kind of in consolidation. the S&P's kind of been more bearish than the NASDAQ. But then we also have SMT at the lows. And then, I mean, you could look at this as consolidation too, or seek and destroy, right? It basically took the lows, took the highs. So we got to just see again if we're going to respect this midpoint. We'll see in 2 minutes what the damage is going to be. Remember, if we break this low, we laid out our 3 PD arrays that invalidates a buy, right? But if it respects that, then we're going to continue to be in line with the bullish DXY. I feel like the bullishness in DXY is probably not going to hold for now because this retracement most likely has to take place. This just looks way obvious. They've already taken highs. They've hit this order block. It's came off this low. This looks really, really bearish given the fact that there's a breaker present. Super obvious. That also is in alignment with an opposing view versus this, right? With this being the retracement to go higher, this being a possible retracement to go lower. So that just all hopefully makes sense to you guys.
Yeah, no, it definitely does. I've also noticed that, like, if you just use like the higher time frame dealing range, like on the daily,
Yeah.
from like high to low, like on the interest rates, we're technically in a premium, right? And in the bonds, we're technically within a discount, right? Within that whole range.
Yeah.
From where is it? Yeah, from that high to all the way to the low.
See, so like, remember how I was talking about this one? If we take it from this low to that high, well, because that's the most energetic price leg. If we take it from this high to that low, the breaker is in alignment, kind of like it is with this as well, right? If we go from this low to that high, it's kind of pulling itself when it gets into the fair value gap, right? It kind of has a similar effect. Like if this was to pull back into that brings us down to a discount for this and then a premium for this. But again, that may have to take place. But we'll see. All right, 6:30 just happened. So let's see what the vibes are. See what happens for the next 20-30 minutes. See, I think it's going to really determine probably today in terms of like what it's probably going to end up doing the next couple days or a couple weeks to start off the week. I think next week is FOMC too, or NFP or some shit. It's the start of June. June, for the record, is one of the months that ICT says you got to be careful of, right? Because it's the summer, like deep summer, and sometimes the summer is not really the most ideal. So you got to be very, very cautious and nimble. Don't overtrade. Don't be reckless. Just expect that it could be a little more difficult. Don't be fearful, right? Just be like, all right, I need to pay attention. Really follow my rules. All right, so looks like it may continue. But again, we're doing the same thing we did yesterday, right? DXY is falling, indices are falling, right? But we see the S&P rallying. We see the Dow rallying. Clearly the NASDAQ is the lagger. So that's showing indication that maybe we should try to look at the S&P. Whoa, the S&P's got some serious equal highs. I didn't even see that. Yeah, if this is going to continue to go lower and we're going to do that retracement effect like we've been talking about, the S&P is going to attack these equal highs. Yeah, no, I got a pretty strong feeling that this is going to probably want to do this retracement. we'll see. We shall see. Now you notice the SMT here? I think we pointed this out the other day. SMT between the bonds that ended up dropping. Alright, let's see what happens here. Oh. So let's see. Let's see what you're trying to do, NASDAQ. It's looking a bit interesting. Now we got a shift in market structure. We got this pretty decent order block here too, so if DXY is to rally, this may be something significant to possibly frame a setup off of. And again, if this high was to break, then we know that this is a market maker buy model. But if this continues, we're obviously in a market maker sell model, and we'll see what occurs down below, right in here. First stage accumulation, right? Second stage accumulation, smart money reversal, first stage distribution, second stage distribution would be at this little down candle here. We don't have a whole lot of things confirming that the NASDAQ can be trusted right now. And of course we got SMT at the lows too. But we also got SMT at the highs. So the bias for the week has obviously been continuing to be bearish. And we want to see continued bullish DXY, which we've pretty much had for the most part. But of course, given the fact that we've delivered to pretty significant levels already, we kind of anticipated the potential for it to stall out and maybe do a reversal, which it kind of did. But yeah, we'll see. We'll see if this is going to continue. But again, just like yesterday, we got the DXY and the indices basically doing the same things. We got a very obvious SMT at the highs. We may be turning here, so let's get kind of in line with what we're seeing here. Got to pay attention. So this could very well be the start to this drop. All right, so if this gives us a nice impulse higher, we're still inside that fair value gap, but we still got that equal high that we pointed out earlier. So yeah, let's see what happens. I didn't want to see this break through like that. That means since this was so quickly broken through, it's probably not going to have too much of like a retracement opportunity, especially if DXY just continues and this just smashes to the downside. We may not have too much of an opportunity to get in line with like a continuation. It may just slide off. But yeah, that SMT was pretty beautiful. Again, when you have SMT, you got to be able to trust DXY and what it's doing. Otherwise, you may get totally fooled because there's SMT that shows up all over the place. The ones that are important happen at particular levels, like this. It happened at this particular level here, right? At a particular time. So, all right, let's see. Let's see. Yeah, looks like things are going to kick back into sell ideas. Again, the NASDAQ has made that lower high. So if we are looking to sell or get in line with the sell, we want to see DXY obviously start to rally. But if we're going to sell and we're going to pick one of these, it's going to be the one with the lower high because it's going to have a more protracted move to the downside. So it's coming up into this order block that we had outlined. Let's see what that's going to do. Alright, so is that a 2-minute order block? Yeah, so we got this pretty nice area here. Yeah, we'll see. We're just gonna be patient. We're not gonna push too much. We're not gonna push crazy. We're gonna let price speak. We're still in the opening range. We got a macro coming up, so it may be best, given what we're looking at here, to wait for either the silver bullet or the macros that are going to be incoming. We got SMT at the lows here. We got it here, here. We have it at the highs. DXY is kind of not doing much to help us out with confirmation. So again, more signal to wait, more signal to be patient. Again, I would like to see us stay inside this fair value gap and then continue possibly attacking these equal highs here, and then continue with our bearish bias we've had that has, pretty much delivered as expected for the week. But we'll see. We'll see if that continues. So now, let's see, go to the smaller time frame. Yeah, so it looks like, if DXY is going to continue, it looks like this could be possibly setting up a pretty nice sell to get us down below these equal lows and deliver the market maker sell model as we've been kind of anticipating. had some pretty crazy price delivery though, bro. Like, it's just been pretty reckless. Like, this is seek and destroy characteristics here. Not only that, we have this larger seek and destroy that we had for let me go do this real quick. Pull it up so I can show you. And we had that larger seek and destroy, which is like right here, right? Took out this low. Came up and ran out these highs. Same thing here. Took out the high, took out the lows. See, like I've been saying for pretty much the past week, I would really like to see this hit this and then give us that decline with bullish DXY continuing to maybe attack up here. We are still in the realm of validity because our 3 PD arrays are still intact for bullishness, which we discussed earlier. And DXY is just kind of stalling out. But yeah, unless this gets violated, I'm favoring the same idea that we've been favoring all week, which is played out, which is looking for sells in the indices. Until that's invalidated, which it has not been, we stick to that. Remember, our bias doesn't change dramatically overall, like every minute, right? Like every couple hours. The overall narrative stays the same. And in this case, our narrative was, or has been, trying to see the indices retrace if they are going to continue going higher off the heels of the SMT here, the SMT here, and then just the simple fact that, you know, there's decent sell side and decent reasoning as far as the yields and the bonds, as well as the DXY to anticipate possible retracement to then possibly go higher. And then obviously DXY to continue its overall bullishness. Until the invalidation points are hit, which would be this low here. Also this order block. So this fair value gap, this low, this order block. Once that's invalidated, then we could consider price seeking potential sell side. And you know, like I said, also from this time frame, in conjunction with that lower time frame, this low falls in line with that. So that'd be a run on stops. There's also seek and destroy here, right? Run on stops, back to the middle of the range. And it's the end of the month, right? So this could, I mean, this thing could literally fizzle out right here, right? So I'd like to see us give an impulse higher from here, because then that'll be pretty convincing. Otherwise, right, we run the risk of it sliding down here. So yeah, until there's something we can put more conviction behind, like I said, we definitely want to take our time. So yeah, let's see what occurs here. Yeah, that's a massive wick. Sheesh.
Yeah,
That's
we'll
just
just see how news at 10 o'clock is going to do.
Yeah, this is just pure manipulation, like
Yeah,
pure
big time.
manipulation. This one too, rallied up, stopped people out. It just like straight decline, pulled all the way back, stopping everybody out. And then I mean the S&P basically killed both sides. So yeah, we definitely 650's incoming right now. So we'll see what happens. One thing we can take into consideration is the fact that once this high breaks, if it does break, that becomes a breaker. And then that's one PD array, the breaker as a, or the potential order block here. That's a second PD array. And then once we get above this high, that's breaking multiple levels, which then in turn could potentially present us with this acting as support to then maybe, like I said earlier, head on up to here if we see bearish DXY. Otherwise, if this respects these consecutive up candles, and this potential little box here could be a bearish breaker. It's kind of a sloppy view for the possible breaker here. It's just not as clean. Like, I mean, there's two swing lows here. I don't like seeing that. I like seeing the one swing low with the down candle, then one that runs up above the high and then smashes below the low. Yeah, remember we outlined this regular trading hours gap earlier too. So the regular trading hours gap is actually here. Or was it? It was... That's a regular trading hours gap. So yeah, if we still see this go higher, remember, if our validation points don't get attacked, or invalidation points don't get met, then this is going to continue doing what we've been saying it's going to do. So we haven't switched our whole narrative to, totally give up on price seeking sell side and price seeking buy side for the DXY. One, because none of our invalidation points have been met for the DXY. Two, same idea is true for the indices, specifically the NASDAQ for right now. Right, so yeah, one thing that we do see though is that the DXY is kind of very, very much lethargic, not really moving too much. I mean, it was doing the same thing yesterday. Remember how DXY just didn't really do much for a little while, but the indices were starting to move. So we may get that same type of vibe today. So we have a low here, we have a run on stops. Maybe we could see this shift down below here and possibly offer an opportunity somewhere in there. 650 macro, so we should see some movements begin now. It looks like the DXY may want to reach lower, but we'll see. So yeah, this looks pretty beautiful. What the hell? Man, it was such a massive drop in the Dow versus the DX or versus the S&P and the NASDAQ. Definitely S&T at the lows. Let's see what's what's gonna happen. Let's see what's gonna happen. Damn, look at how wild that looks. Ugh, that's disgusting. The Dow is absolutely disgusting. That is serious seek and destroy profile right there. And I left equal lows here, so it makes me feel like it's still showing potential for it to go lower.
Ooh, dollar's falling right now.
Yeah, I know. So yeah, if any type of sell idea was in the cards, it's definitely not timing wise right now. I mean, this is disgusting too. This is like very much seek and destroy. Run on the stops high, run on the stops low. We got very obvious equal lows down here. Just like this has equal lows, the DXY has the equal highs. And again, we have news at 7, so maybe this is just going to punch lower, sweep out liquidity to the downside one more time, and then give us a massive impulse higher, breaking this high. That signature would make me pretty much trust the fact that, you know, we'll see these obvious lower range targets. But again, we gotta wait. Because if you ask yourself, where's your model, and would you have been comfortable to enter anything that we've seen so far? The answer is most likely, at least for me, no. There's really not much. You know, I'm very, very picky with what I try to take. And today's not showing everything that we like to see overwhelmingly. I mean, there's obviously opportunities you probably could have taken. But again, like we talked about yesterday, is that your model? Is it something you felt actually honestly comfortable about if you would have got in and participated? Right? That's a very important thing you got to be honest with yourself about, you know, and I have no shame right? Like saying when I feel uncomfortable, when I'm not going to do something, why, so on and so forth. So I want to make sure you guys feel that way too. So yeah, let's continue to watch the potential for price to drop. I'm still favoring that, especially if we could see DXY get above here, because this then turns into a bullish breaker. And then that folds well, especially if this ends up not coming back to the breaker, or if this ends up leaving this as a breakaway gap. Right? So yeah, we got this incoming situation. Yo, is the music too loud? I just want to make sure.
No, it's all good.
It's all good? For sure. Oh yeah, let's see what happens. Looks like it's going to continue to unfold the way I said it may, and continue to favor sell side. So yeah, we got this down candle here. Let's observe what that does.
Yeah, I'm just gonna wait till 10 o'clock.
Mm-hmm. We are inside this 650 macro, so it may deliver because of that simple fact ahead of the 7 o'clock. But I'm also gonna wait.
Yeah, the bonds are going high right now.
Mm-hmm. Yields looks like it's gonna want to reach down and do this
Yeah,
little
I feel so
retracement.
too, to be honest.
It's starting to feel a lot more like it, like that's what the case is.
Mm-hmm.
Now, if we would have came back into the midpoint of this inversion and then really wicked off, then I would have been like, all right, it's probably gonna leave it. But since it's not and it's spending so much time there, it may want to come up into here. I mean, even this volume imbalance could be where it stops, but it seems like it's still going to push up a little bit. We'll see. We got news in 2 minutes. Let's see if some fireworks happen. Let's see. All I know is the S&P looks like trash. The Dow definitely looks like trash. And the NASDAQ looks like it may be the cleaner, weaker indice today.
Mm-hmm.
And if DXY rallies, then obviously we want to be part of that. That one in particular. Let's see, let me get my order block that I pointed out earlier. See, is there a 30-minute one too? No. Yeah, that 15-minute order block. We've now tested that 15-minute order block, and looks like it's came off that high, off that order block. Let's see what happens. I appreciate all you guys that have hopped on, been chilling with me the last hour. Appreciate my my private community students, Nico, and do I have Neil here too? Yeah, I got both of y'all here, so I appreciate both of y'all.
No worries, bro.
Of course, my YouTube family too.
If anything, we appreciate you, brother, for doing this.
Nice. I just want to see y'all win, you know what I mean?
Respects you.
We gotta be freaking thriving, yo. The world's on fire. So shit, we gotta be on fire in the marketplace too.
See what this news does right now.
Yeah, it looks like if DXY gives us a nice impulse higher, we should see this drop. So we'll see. We'll see. We'll see. I'll just give it a second. See, remember we got this delivery into the higher time frame. Remember how I said the higher time frame levels or the higher time frame moves generally will have institutional sponsorship as a news event comes out. So right now, given that perspective, we're pushing into a higher time frame fair value gap when a news event's coming out. So that may be the catalyst to push price away from it. And if it does break down below this low, we also have this inversion. We have this order block here, so we don't have nothing to worry about in terms of so-called missing a move. Gotta let this thing set up. So if you look at these highs here, if DXY rallies, we do have an SMT. Because the NASDAQ again has the deepest or the lower high in the SMT, that's going to be the one that we'd like to participate in if we do take a sell. So we're going to wait. And wait, and we wait, and we wait. Alright, so what are we looking for? We're looking for whatever the DXY is going to do. This is not helpful. Being in consolidation makes it difficult for clarity to come in the indices. So we want to wait and see. We're wanting to look and see if price is going to want to break through these highs and send this lower. That's what I am favoring. That's what I would like to see. So then we can attack the lows down here as a market maker sell model. But if we get a bounce higher above these highs and then DXY declines, price will most likely attack these highs. Why is there two plans, contingency plan for one side or the other? Because for one, we're in a higher time frame consolidation for the indices, for the Nasdaq as a whole, and then also it's the last day of the month. So you don't ever hold on to a strong armed bias when it comes to that type of scenario. There's a time and a place for certain things, and this is the time and place.
And honestly, I believe this whole week's been honestly pretty, like, with the price action.
Mm-hmm. Oh yeah, that just kind of justifies, the difficulty given the nearing the end of the month, right?
Yeah, for real.
It's just like a beautiful testament to that.
Uh-huh.
So we got this drop now. We just need to see DXY rally, and then we have a midpoint there, but we also have this as a potential resistance level that could be utilized if we do feel the inclination to try to take a sell. We'd have to see DXY rally to be able to trust that in any capacity. But we do have SMT at the lows. Things are still kind of just doing whatever the hell they want. Like, look at me flipping through these indices. You can see they've all done whatever the hell they chose to do. The Dow looks like crap. S&P definitely looks like crap. And the NASDAQ is just kind of sporadic, but still looks like crap. The S&P, though, has beautiful layered equal lows. So, and then, of course, the NASDAQ also has now presented equal lows. We got a fair value gap down here. And then we got equal lows down here in a possible market maker sell model framework. So those are some of the things that we have in front of us. And again, price is just not doing nothing. Ask yourself, if you're sitting there antsy trying to take a trade, ask yourself, where would you have tried to enter that makes sense to you, that's comfortable to you, that you would have been like, oh hell yeah, it's gonna do this or do that. Just think about it, right? If you can't come up with an answer, you gotta force yourself to understand. You gotta, try to take things slow. Right. All right, so we're getting some action here. Still inside the 650 macro. Still in the silver bullet, the beginning of the silver bullet. So let's see. If DXY declines, if we break above this high, we may start to be able to trust a potential upside move.
Okay.
Again, the contingency plan for a failed bearish idea would be this potential price action as a market maker buy model, especially if DXY does this. And if the indices continue to do this. We also have SMT at the lows, which helps justify the upper range move as well. So let's see. We've got SMT at these lows. We do. So we've got SMT here. Right, we got a run on stops. We also got a larger run on stops. So this could be a shift in market structure. If DXY falls, you pay attention to this fair value gap right here. Where would your invalidation be? Below this low. What the hell was that? How the hell did that happen? That was so weird. But yeah, the invalidation, if you were trying to have the school of thought in terms of a buy, you would basically take this up to possibly one of these highs. But then your invalidation would obviously be below the low here because there's a fair value gap, down candles consecutive, which is a potential order block, and then you have the swing low. Right? But again, still very high risk. Still hasn't really done anything. Right? Still the end of the month. And we're still in the higher time frame, I guess, consolidation for the NASDAQ. right? So again, watch this fair value gap, like I said. See if it can get up above this high here. Now again, if you were to enter, if I was to take an entry there, I would take full profit, most likely above this high because of the conditions. But this is a beautiful YouTube model. Okay. And remember, it's high risk. You want to take what the market gives you. You don't want to look for 100 points. DXY is very much confirming that this should be a decent idea. So, we shall see. Yo, is the music too loud? Seems like it got a little bit louder somehow.
No, it sounds good. Yeah,
Sounds
I
good.
barely can even hear it, to be honest.
Oh, okay, beautiful. All right, so let's see what happens here. Again, I would like to see this more than I would like to see price go higher. But that potential school of thought for price to want to go use this fair value gap has now, in my opinion, been totally disrespected. So I wouldn't be interested. We're stuck inside this consolidation as well. Like I said, it would have been a way higher risk opportunity just given the condition. And then obviously we can see that that high risk has come to fruition. Would have bit you in the ass. So I really don't like what we're seeing. Yeah. There's nothing I feel entirely comfortable with. That did seem like this could have been something, but obviously the market was like, yeah, not today. Not today, son. All right. So now DXY and then the NASDAQ is falling together. It is presenting us with this move here, and the initial bias, which is price trying to reach down, using the news event to trigger this move from this fair value gap to go lower. So let's see. So we got this order block here. What else? What else have we got that could be potentially used? Yeah, it's just really not much of a chance, right? Didn't really give any chance to position for this sell here. So, I mean, you could use this inversion fair value gap here possibly. But yeah, look, it's just quickly eating up all the downside. Really played a manipulative game, seek and destroy, choppy, and then price said, let's deliver on that higher time frame bias. DXY is still not really doing much either. So let's see what happens. So I guess the right as the 650 to 710 macro delivered, we ended up seeing price take a dive. Now we got this fair value gap. So yeah, now we're in the second stage distribution area of this market maker sell model I pointed out. Very, very sloppy, hard to read and gauge trust-wise market maker sell model because of what the hell it did here. It just really didn't do much. But again, when the lower time frame is confusing, you got to always revert back to what you see on the higher time frame. And what we have discovered today, based on what I've talked about in terms of using the economic calendar with the higher time frame moves, I mean, it visually shows you just how effective that is and how valid that is. When you're looking for a higher time frame move to occur, like say in this case it was a retracement to a 4-hour fair value gap to then deliver lower. At 7 o'clock the news came out, and obviously you can see that basically was the fuel or institutional sponsorship to get price to be pushed lower. All right, so maybe it can give us a retracement back into this, and then maybe that'll continue to push lower. So yeah, my favor for direction now is pretty much entirely focused on our overall weekly bias that again hasn't changed, which was bearishness to reach down to that lower range target. So yeah, let's see if that comes to fruition. So yeah, if this just blasts through this, that'll now put me on the sideline, most likely for the rest of the day, because it's very much hectic, right? And it wouldn't be worth pushing too hard, given the fact that, again, it's the end of the month, given the fact that things have been a little choppy and sloppy. So there will be better days, right? If this delivers here, this is a beautiful entry. In line with the market maker sell model I painted at the very beginning. In line with the higher time frame view we talked about in terms of this being tapped, using the 7 o'clock news to potentially frame the short. That also came to fruition as well in the S&P too, right? So yeah. So another validation thing we haven't checked is the euro. So the euro has higher highs, or the GBP has higher highs. Euro has higher highs too. Actually, GBP had a lower high, while euro had a higher high. There's really no S&T here either, like at the lows or anything. This has dug lower into a discount, but this is a very strong displacement. So we'll see if that holds any weight. This is kind of suspect here, these equal highs. I think we did pierce the high here, but still suspect. But yeah, we'll see. we got this order block here. Let's see how that holds up. DXY is not really favoring this holding. So again, remember what I said, I would have liked to see this displacement to fully trust that we're gonna drop. Like this displaced lower, we should have seen DXY displace higher. Because that didn't happen, this runs the risk of just fizzling out and just not really delivering that cleanly, or if at all. I mean, that would coincide with the vibe that we've had pretty much all morning. So we'll see. This should act as an intermediate term high. I do not really want to see this get taken. If it does, it's going to start being pretty much red flags. So yeah, if we get down below this fair value gap, if price just slides down below that, that's a good sign. Again, if we start taking this high and pushing more into this order block here, I'm not really going to be too ecstatic about that, especially with DXY falling. That would make me lose a little less faith in the fact that this could continue to maybe attack the lows. Again, we're at this 50% now, right? So we're in a premium. If it is going to sell, it's going to sell here. Again, we should see this act as an intermediate term high. See if that holds up. Again, I'd like to see DXY come in, give us an impulse higher to attack these equal highs here. That'd be beautiful, especially with this breaking through this. If it slides through, use it as resistance, then we should have a pretty easy ride down to the lows here. And if this does act as the second stage distribution, right, given this looks like a possible market maker sell model, then once we get down below that, that should be a pretty easy ride down to below these lows. But again, we'll see. See, yeah, we don't like seeing when there's so many deep wicks. Like that's just like purely showing you they're absolutely manipulating this price action. They're just wicking. I guess you can argue too that this is a SMT at these lows. Yeah, see? Yeah, this is not very convincing, to say the least. see. Now, if this was to break below this swing low, we may have a potential opportunity. And what would I use? I would use this as a optimal trade entry. If it gets below this low, that would confirm the optimal trade entry, especially if DXY goes higher. And then I would use this inversion fair value gap as a potential area to frame an entry to then slide us down below these lows. Otherwise, I'm not going to be interested in any of this. And mind you, if this breaks, it broke this high, right? So this is a short-term high. If this does give us that rejection and then retraces back, like I said, then this becomes the intermediate term high. And then the invalidation for this bearish move, if that was to take place, would be this intermediate term high. Because if it's bearish, we don't want to see intermediate term highs break. Similarly to if there's an intermediate term low, if we're bullish, we don't want to see the intermediate term low break. So in this case, if it creates a low here and continues to go higher, this is an intermediate term low. Right? So it's kind of the lay of the land that we see here. See what happens. Yeah, this could definitely be an SMT that upsets the potential for a sell, especially if DXY wants to continue this. All right, let's see what happens. So yeah, this is an intermediate term high. You see the short term high here, short term high here. Now if this breaks, any type of sell idea is invalid, 100%. Yeah, this is not convincing here.
Yeah, it just makes it so harder too because the dollar is going down as well.
Yeah, yeah. Things have been skewed like a lot the last couple days.
Oh, this is such shitty conditions, bro. Holy fuck.
Yeah, look, this right here. We'll see if this order block holds. It's just very, very, very vicious and manipulative right now. Just trying to trap both people. Anyone trying to sell would be in profit here, but then it's turning back on them to squeeze them out. Right? Anyone that bought here, they basically got stopped out. Anyone that sold here, if it breaks above this high, they got stopped out. So they're basically not letting anybody be in position. So yeah, let's see. Can we get below this low? DXY is just not looking like it's strong enough to have any impact on this. It looks like it's just literally fizzling down. Look, you see how much they're attempting to go down? That's starting to make me have that red flag. It's like, they're faking out, pulling up. So it's like they're trying to pull in the trader's psyche to go in there and try to sell. So the only way that this will be trusted, at least for me, to go lower is if we smash below this low. Otherwise, this just has a feel of manipulation. Like they're pulling them in after they just stop people out. So if we can't respect this, it's already very suspect. But I'd like to see this respected if it is going to try to give us any type of life for a sell. So yeah, this is the invalidation for any sell idea. So if it breaks above that high, sells are out the question. DXY, we wanted to see DXY off of this end up giving us an impulse, but it just didn't want to do it. It just can't muster up the strength. Looks like it's respecting this this fair value gap here too. We'll see. So given the conditions, given everything we've discussed, given what we see in price action, would you be beating yourself up, or are you beating yourself up for not taking a trade? Because if so, you got to ask yourself, why? Would you like to be in there fighting the market, having conflicting views, and just like being probably destroyed because people take so many entries? Like they're trying to, I need to hurry up and make an entry. Oh, I took a loss. Let me take another one to make it back. Like that whole cycle. When you reflect on things and you look at how, at least in this case, the market's not being very cooperative, right? I mean, it's a good thing that patience is there, that you wouldn't have taken a trade. You know? Yeah, see, DXY is really not allowing for anything to go higher. And I'm thinking that it's because of this draw on liquidity being this fair value gap. And then this breaker and fair value gap too. I think that's having the impact on the market that we're seeing with the DXY climbing lower or digging lower. See, if it keeps wicking this fair value gap, I mean, that's a pretty strong signal that it's not willing to break down below that. Let's see. So again, we got this inversion fair value gap. If we get a nice impulse and then possibly an impulse higher with the DXY to further confirm, and then a retracement back into that. If that was a hypothetical sell, which, you know, could be the case, the entry would be there and my stop would be above that high. We need to see this impulse higher though. If this doesn't go higher, I don't trust this at all. Even if it delivers, I need DXY because of all the things that have been happening. I need DXY to show me something in my favor. Because it's just been too manipulative. Right? Remember, we're at war when we're in the market. You don't want to become a victim because you're not doing your due diligence. You're not being paranoid to a healthy degree. Right? That's just part of it's a requirement. So yeah, if this comes back into this, possibly gives us a retracement into this fair value gap. Right? Or if it was to come back into here, that'd be pretty good too. Well, what the hell was that? The fuck just happened? What the hell just happened? Well, looks like it doesn't want to give us that. See how it did not hand us that retracement that I would have taken to enter. Notice how we didn't give up fully on the sells. We didn't fully switch to the buys. Continued to trust our bias even when it felt a little bit difficult. But it just didn't offer it. So the patience, although the patience kept us out of this setup, be realistic. Would you have been comfortable entering at any given moment? The answer is most likely no. Okay? The answer is most likely no. And, maybe you think, that's nonsense. Maybe you did find something that you're comfortable with. That's cool too. But with how I'm seeing things, the way I'm presenting myself, and me being honest with you guys, as I always am, that's the view that I've had, right? There wasn't really much that I felt comfortable with saying, hey, put an entry in, take a trade on your demo or whatever you're trying to do. The overall bias, though, was we were favoring continued bearishness unless this intermediate term high was taken. That never occurred. Price was really, really choppy, didn't give us a chance to do anything. We saw something like right here that could have potentially offered something that made sense to go higher if things fell in line because DXY was being bearish. That's why we even considered that. And then that would have potentially, drove us up a little bit into this regular trading hours gap. But mind you, things for that also didn't fully get kicked in line, right? And then it got instantly disrespected by doing this. And I said the invalidation for that idea to even be any type of interest would be the low here, right? It got suspect when it started digging deep into this area, right? So then once price broke down below that, I'm like, yeah, we're for surely going to be aiming at sells if we're going to try to take anything, but it has to align. And it retraced up to here. I said this may be an intermediate term high. It may form into an intermediate term high. We just had to break down below this low or this fair value gap and use it as resistance. Never did that. It came through it, rallied back up again, took this, then presented this as a more defined intermediate term high because it retraced into the fair value gap and the order block. It made a short-term high here, short-term high here. Then we have an impulse lower. Never gave us the retracement to the fair value gap that we wanted to see it reach into. Not even this one. So that means I don't have a setup. That means I don't take a trade. That means I'm not sitting here being angry that I didn't get the trade. It didn't do what I wanted it to do. This is a business, right? You have to be disciplined. For you to be consistent, you have to have guidelines. Otherwise, you'll fall for anything. And today, if you didn't have rules, if you weren't being disciplined, you would have probably fell for something in here, probably would have fell for something in here, probably would have fell for something in here and got eaten up. Or in like one of the other assets, especially if you were trading the S&P, you definitely would have got beat up. Definitely. Probably in the Dow too. Because, they're literally not allowing people to do anything. Right? Maybe if you took the YouTube model here, anticipating the sell, maybe that would have been fruitful for you. But that was right at 6:30. If you follow the rules that I employ, I never take a trade right at 6:30. Right at the open, because, bro, you never know what's going to happen. It could do anything. It could whipsaw you and still follow through with the manipulation till, after the first half hour, leading into the silver bullet. That's why the silver bullet's what it is. That's why he painted that as a model. Because you get past the manipulation, right? Or at least further along in the manipulation to have a better understanding of what price is trying to tell you it's going to do. Right? I mean, you could have also, aimed for this. Maybe you could have said, oh yeah, there's an argument to take this. Remember how I said this is the, I kind of forgot, right? But I said once we come down into this, if we retrace back into this is a second stage distribution and it should be quick. I mean, it looks like that's actually come to fruition based on what we talked about earlier in terms of this being a market maker sell model. Looks like that may still have been valid, right? For sure, one of my private community students had to go. See you tomorrow, brother. Yeah, I appreciate all you guys that have been on the call for the whole time. Again, just want to make sure you guys know I appreciate you. And I hope you're getting value. I hope you get value from all these calls that I do, because it's literally just to give you value. It's not to try to, build up like some image that I'm the best or anything like that. It's literally just to help whoever wants to listen. So thank you guys. I appreciate you. Especially you, Nico. You're freaking on every day, yo.
Yes, sir.
I hope.
Honestly, what a shitty day, to be honest.
Oh
like,
yeah,
it's played off, but it was just fucking.
Oh yeah.
I don't know, man. That's just really hard.
So that's the thing. We kind of got distracted a little bit from the second stage distribution. It looks like that's gonna be, like, I could have waited the entire time just to see if that was gonna occur. Because remember, ICT says that's his favorite model, and I mean, you could see why, right? Every time I've pointed out second stage distribution areas, for the most part, maybe 95% of the time in our private community, it has beautifully delivered just like this. When we were correct, obviously, right? And that's also pretty high percentage of the time. And you could see that's the best entry possible, aside from this possibly being a optimal trade entry. That's hard to trust that was an optimal trade entry because of the fact that this is not cooperating, right? But it is what it is, right? This here, again, I'm kind of kicking myself because that's what I called at the very beginning. I was like, we could see if it gets down to this second stage distribution area in this market maker sell model, if it's confirmed that that's a market maker sell model, which after this impulse happened, it was. Once it returned back into here, that was literally the first idea we painted, right? Or the one that we painted to see, like the one that we wanted to see the most, right? At least for me, right? Because that's like one of my favorite things. I love the market maker sell model. Love the market maker buy model. I always talk about this particular model because it's like a pillar to what I use. But yeah, this is another example of a second stage distribution delivering beautifully, better than any of these other ideas, right? But again, I did kind of want to see us pull back into here. Again, I honestly forgot about what this was as we delivered because I got distracted. But yeah, freaking beautiful. At least that part. All this was a bunch of freaking nonsense.
Yeah. Oh god. Okay, I think I'm gonna get going, Christian.
All right, brother. I appreciate you hopping on.
If anything, we're gonna be streaming tomorrow as well.
Yes, sir. Every day. Oh,
Okay,
every
sounds
day that
good,
we
homie.
possibly
I'll see you
can.
tomorrow then. Take care, guys.
All right, for sure, brother. Appreciate you. Have a good day.
You as well. Take care.
Get the hell out of here. Yeah, guys. I appreciate y'all. And I do want to kind of, probably use this time up until 8 o'clock as a time to get some questions that you guys have answered. I appreciate you. You guys are welcome, bro. All you guys. Jones, I know you've been on a couple times. Not try to say your name. ATL Mogul. Hope that was right. But I appreciate you too, man. But yeah, I hope this stuff made sense today. Yeah, like my private community student said in the chat, definitely give the video a like if you got some value. Again, you guys taking time out of your day to come and watch what we got going on here is greatly appreciated. I'm gonna have more of my private community students hop on as well, just so they can give their own insights, because they're also doing phenomenally well, and they got a lot of value that they can share with you guys as well. Some of you maybe can't join the private community, but I feel like bringing them in, because they're an asset as well, and to showcase their skills and show appreciation to them even further, and while also giving you guys value. I want to keep bringing them on, right? So I hope it's not too distracting, but yeah. So yeah, the initial bias, for those of you that have been here for the whole time, we did favor looking for sells. We did paint contingency plans for price to maybe go higher because of DXY being so bearish, but obviously it didn't want to occur. Dominic, bro, is this the key to trading? Let me see. Bro, is this the key to trading only A+ setups and fixes entry models? Well, and fixed entry models. I'd say it's definitely a part of it. You're not always gonna only have A+ setups. So, I mean, that in a perfect world, only A+ setups, only taking those types of setups, that'd be beautiful, right? That'd be obviously what everybody would like to do. Only take the A+ setups. But there's an amazing book I'd like for all of you guys to read, if you guys like to read. It's called The Mental Game of Trading by Jared Tindler. Oh. And he pretty much discusses your A game, B game, and C game. So he kind of touches on the A+ setups. But he says that most of the time as traders, which I've also found is absolutely true, most of the time we're going to be hovering around our B game and C game, because there's not always going to be only A+ setups. The main portion, at least from what I've discovered in terms of what will bring a trader success, has to do with obviously risk management. Because if you can't, like in the last stream I talked about this as well, I think I've talked about it a couple of times, but if you don't have risk management, it doesn't matter what model you use, it doesn't matter what thing you use. If you're not able to keep the money that you make, it doesn't matter how much you make, right? So at the end of the day, part of the keys to trading has to do with you understanding and mastering a risk management protocol. I do talk about that also in my YouTube channel. I have shared one risk model that I always employ. That's like my favorite. There's a couple of them, whether you are, more of an advanced style trader, or if you like higher risk, but you want to do it in a safe, reasonable way. There's ways to amplify things with higher risk. That doesn't mean you're risking 10-20%, but it does mean that maybe you've traded for a little while and you want to up the ante a little bit. There are ways to do like a little bit more risky things safely. And in that case, I mean pretty much like, anywhere from 4 to 5% per trade. But there's a whole deep conversation we have to have about that. And then also a performance analysis. You never want to do that as a new trader. But yeah, part of the keys is obviously understanding your setup and having a fixed entry model. I have 4 fixed entry models that I employ, that I teach my students, depending on what they want to use. But of course, they've all come from ICT, right? So you have to just find what works for you. But it's very important that you have a fixed entry model and you understand what an A+ setup looks like, what a B setup looks like, and what a C setup looks like. And make sure you spend the most time focusing on your risk management protocol, learning how to keep the money you make. Doesn't matter how much you make, right? You got to drill that in your head. It only matters how much of that money you can keep, because anybody can go in the market and make money. Anybody can do that, but not everybody can keep that money over time. And that's where 90% of people fail. And it's also has a factor of them not having a fixed risk model, or entry model. That's awesome to hear, bro. That's awesome. Dominic said, "Thank you, man. Really like your patience and stream every day. Because of you, I don't trade choppy trades anymore. I appreciate it. And maybe you'll pass your funded." I believe you will. If you just make sure you look at this as a business. Because think about it. Why would a fixed entry model be an asset to you as a trader? Well, if you have a business, a brick and mortar business doing anything, you're going to have a fixed way of doing things. Because why? You want to have measurable, repeatable results. So you have a measurable, repeatable bottom line at the end of the month, at the end of the day, right? So on and so forth. So it's the same exact thing for trading, especially when you're trying to be a diligent trader that wants to fully analyze the way you do things and find areas where you can improve to really understand your strengths and weaknesses, right? You have to have something that's fixed, because if you're going in, especially as a new trader, and I find, out of the 170 plus or more students that I've had the privilege of spending some time with and mentoring, I've noticed that a lot of times when they're doing their back testing, because there's such a vast amount of information, especially with smart money concepts, or even other concepts, right? There's so much information that they try to do so many different things at once when they're trying to learn. And it's like, how are you going to know what works for you if you're doing so many different things and don't stick to a fixed model to begin with? Or even as you progress, you can't get accurate data that way. So if you think about it logically from that perspective, it's pretty insane for any of us to go in and try to do so many different things. I got all the details. I think it's in the description, brother, if you want to go check that out. I got a bunch of different details in there. And then you could kind of decide which would work for you. And then, of course, there's the one-on-ones as well, which we could hop on a Zoom call and have a discussion about. If you don't follow me on Instagram, by the way, definitely follow me at WMG Trading. I post a lot of psychological things on there. I mean, that's totally used to pretty much highlight things that have helped me, that help people I've traded with and learned from. I'm obviously a purist when it comes to ICT trading. I don't use anything else, so that's kind of what a lot of the stuff is focused on. But even if you trade other things, there's ways to merge this into normal retail logic as well, and still find amplifications to what it is that you try to do. So it just depends on you, but that it's very important to have a person that can help guide you through that in some capacity, because mentors are cheat codes, especially when there's someone that is willing to do like what I'm doing, what ICT does, and showcase what it is that we do, that doesn't have a crazy ego trying to shove some stuff down your throat, right? Like trying to pull you away from being an independent thinker. Like all that stuff is toxic and nonsense. Trying to only view an image and all these different things. None of that matters when you're face to face with yourself in the marketplace with risk on the table. What matters is your processes, and like you were saying, some of the keys to trading, knowing your setup, having fixed entry models, you know, and definitely being around people that want you to succeed, that aren't here to try to, you know, again, pull you away from being an independent thinker. Because like I say, in most of my in most of the calls and the streams, especially the ones that I do with my private community, you got to be an independent thinker. No matter how good, you know, I am, no matter how good anybody is that you try to watch and learn from, at the end of the day, you're going to be faced with yourself in the market, and you have to trust yourself. So you got to learn how to trust yourself. And part of that comes from having these organized plans, organized systematic ways of doing things. You know, so again, so it can be repeatable, so you can improve upon it, and then also so it can be a continuous, repetitive process, because you don't want to be all over the place, especially back testing. That's why it's important to have one model, you know, and at least at first. I have 4, but I have 4.5 years of experience, and it's taken me years to master or to understand all of them. Set aside from the fact that, you know, we got to learn, you know, fundamentals, how the market really works, you know, what makes price go up and down. It's not buying and selling pressure, I can tell you that. Okay, and you know, validation, invalidation, you know, all kinds of different things, right? But it's important to be an independent thinker. It's super important. That's why I emphasize that every single day that I do streams, every single day that I do anything that has to do with being around other people, because again, you're only gonna have you in the market, and you know, signals and all these different things that can only take you so far. And at the end of the day, you still don't know for certain what that person's doing, right? Like why they're taking the trade, what makes them trust the trade, and why they maybe got out, and why you stayed in, right? You won't understand the validation, invalidation if you're just taking signals. And there's nothing wrong with signals, but you got to understand the system that you're trying to take signals from, right? But again, that's another thing that removes you from independently thinking. And to do this full time, like I have for the last 3 years, like many ICT students do for, you know, however long, you have to be an independent thinker. You have to. It's vital, right? So, but yeah. Dominic, definitely go check out that information, and then maybe make a decision on what you'd like to do, and if you'd like a one-on-one style situation, we could hop on Zoom, and then we can discuss some of your needs and some of the things that we can set up for you in terms of, you know, one-on-one coaching and stuff like that, if that's what you'd like to have. But of course, my private community, I have so many students that have come to me, and the private community alone, right, is super helpful. We have a lot of really amazing traders in the private community. I do like to keep it small. I'm not out here to get like 1,000 people, 500,000 people into it, because that's just, I like to be able to spend as much time as I can with each person. It's not, you know, trading is my main income, you know, so, and it's going to stay that way. And all the help and anything that I offer in terms of a service has to do with me sincerely trying to help, but also weed out the people that aren't serious. Because, I mean, who wants to waste their time? You know, especially if you love what you do. And I love this. This is my life. This is what I do every day. My private community knows I'm doing something pretty much every day, unless something's happening in my life where I have to deal with family or something. So yeah, it's like it's kept as a tight-knit family environment, and every student is valuable to me. So, and I like to keep it that way, right? So yeah. Oh, what's up, Harley? I didn't even know you hopped on the Zoom, bro. Okay.
Hello.
little late, my brother. A little late.
Yeah, a little late.
It's all right. It happens, Joe. It
Just
happens.
a little.
Just a little bit. It's all right.
It's fine. I'll try the Asia session.
Yeah, for sure. Let me just kind of share with you, since you did kind of miss what we kind of did. So we wanted to see DXY respect the fair value gap here. We want the fair value gap is what I think on the 8 hour. So price retraced here. We saw the bonds, right? We wanted to see if they were going to drop. But obviously there was the risk of it looking to want to retrace because it was really bearish. It had the risk of it retracing into these upper levels and then also retracing lower for the yields, which, as you know, basically determines where DXY is going to go. So that pretty much is the reason why this has had a struggling effect to try to go higher, because the yields were not allowing it to do so. So now, obviously, it seems like we're going to end up digging down to here, or maybe using more of this inversion fair value gap to basically position for possible buys. If you go from low to high, though, and you're taking premium discount into effect, price could easily want to reach down into this area to then position at a discount, because this line here, right at the high of this fair value gap, that's pretty much equilibrium when you go from this low to that high. So when price could easily want to come down there. Smart money likes to buy at a discount, right? So it's very logical for that to happen, and then for us to continue going higher in that capacity. But yeah, so that's why this has basically kind of failed, I guess, to use this as the support level to go higher. Yesterday we were talking about on the live call about this previous week's high being attacked, and the previous week's high obviously was attacked, and then once it hit that, because it's Thursday, Friday, when a higher time frame PD array is met, generally that's going to instigate some type of retracement, which obviously occurred here inside this weekly range that has pretty much been bullish, right? So the failure for this to support price inside this fair value gap and go higher, we can also kind of erase that order block too. That failure kind of made today a little bit more difficult. But we did identify this as a market maker sell model. If we can go to look at these higher time frames. Before we determined the market maker sell model to go lower, we've been calling for this retracement to drop down into this fair value gap to then potentially go higher. This retracement is backed up by the SMT at the highs here, the SMT at the highs here, the large range expansion to the downside on the Dow, signaling the fact that there is obviously weakness fluttering across the indices. But again, we wanted to see DXY support that and go higher, right? But it didn't have the strength to do so today because of the yields. Another reason why the indices could be favored to go lower is because of the behavior we're seeing in the bond yields, right? The yields are going higher, which generally leads us to see higher DXY, lower indices. But since DXY is a little bit shaky, we still see the relationship performing in terms of higher yields equating to lower indices. Off the backdrop of that, regardless that the DXY was, kind of being a little shady, we see that this retracement here, right, on the NASDAQ, basically, if we go to the lower time frames, maybe the 4 hour, we could see how that retracement here, right, this big run higher, came all the way to this fair value gap and used this 7 o'clock news event as the catalyst to trigger this down move. Okay, so pretty much DXY was being shaky, but we ended up trusting that this retracement would occur because the yield relationship also with the indices. Does that make sense so far?
Yeah.
Yeah? Okay, for sure. And then, yeah, like I said, trying to time when this would have a significant push away from that if that was going to be the case, which took a while to confirm. But because it was the case, we used the timing off of the economic calendar to assist us in the delivery of this move to want to go lower. And then again, that resulted in, when we dropped down to the lower time frame, off the backdrop of that higher time frame analysis and the yield analysis, we were able to identify this as a potential market maker sell model. It was a little bit hard in here. If you go and watch the replay of the YouTube stream, you'll see that we were having some contingencies getting planned to potentially see this fail. But once this dropped here, we were able to be confident that it was going to continue to fall. I did map this out as a level to watch. We did watch this as well. And I did say something about this area being a possible buy, but that ended up failing, unfortunately, right? But we didn't take an entry because there wasn't enough signals to trust the fact that this was going to go higher and negate that sell-off. But again, once this fell lower through here, we were able to try to frame out this as a potential idea. It ended up not doing what I wanted it to do, right? I wanted to see it break through this and then use that as resistance to then position us with the sell-off. That didn't happen, obviously. It didn't come back into that. But what it did do was, when we framed out this market maker sell model, which was basically in this fractal here, as it rallied up, we were able to map out the market maker sell model framework within this retracement, as you could see here. And this was the second stage distribution area, which we were watching. I got distracted explaining something, so we missed it. But nonetheless, we called this as the potential idea, given the fact that this was all shady and it didn't really have any clarity. Once it got down to here, that would have been the main idea that I wanted to see deliver, which it did as a second stage distribution in this market maker sell model, which again was framed off of this 4-hour retracement to the fair value gap under the guise of, oh, whoops, shoot, headphone died, hold on. 1 second. Let's see. 1 second. Hope y'all can still hear me. Freaking headphone. All right. Harley, can you hear me now? Oh, shoot. All right, how about now? All right. Could you hear me the whole time? Okay, all right, for sure. Just wanted to make sure because I couldn't hear you. All right, so like I was saying, all that analysis that we just described was basically under the umbrella of this higher time frame retracement idea because of the massive up move, the massive the massive up move that ended up resulting in an SMT that we've been talking about for the last couple of weeks. And then, of course, we saw this giant move on the Dow, which signaled that there's obviously weakness. So then basically all of this justification for the sell ideas basically could have been trusted. It took us a little while just because of all the conflicting behavior, especially with the bearish DXY here. It's hard to trust a sell in the indices if the DXY is bearish. But yeah, we were able to basically trust it because of the yields, right? When the DXY acts a fool, you can always try to revert back to the yields to try to confirm the sentiment or the intermarket relationships. And then as you could see, that pretty much was in action today, right? Of course, the best idea would have been this, second stage distribution, at least for the way I like to trade, because I'm like heavily focused on market maker buy and sell models. I focus on breakers too. I did call this out as a possible breaker too, but this was also an order block as well. Right? So hit that order block. This ended up being an intermediate term high, right? So I did say in the moment, you'll see in the replay if you wanted to go back and watch it. But when this high was formed, I said this will likely create an intermediate term high. I did point this one out as a possible intermediate term high if we got down and closed below this, but it didn't do that. So it rallied up, took out the stops here, left a short-term high, retraced into the fair value gap as well as the order block, presented this as a intermediate term high. So I knew that once this continued to smash lower below this, if we got a retracement into the fair value gap, that would have been trustworthy to take down and ride below the equal lows or original consolidation of this market maker sell model, which again came from the framework of this 4-hour fair value gap retracement timed by the economic calendar for delivery, all under the umbrella of this assumed retracement off the highs using the SMT and the sentiment shared from this, as well as the sentiment shared from the bullish yields. Does that make sense? All right, wonderful. So yeah, that's pretty much everything in a nutshell. I'm surprised I was able to get that out and it made sense. But that's pretty much everything in a nutshell from what happened this morning and what you missed, right? So, but yeah, we've been on for now pushing 3 hours. So another 3-hour session. Yesterday was 3 hours too. And yesterday was a bit harder to gauge as well. But we managed to press through. We didn't get to have an entry today. We were able to enter 2 entries yesterday that were profitable. But today, unfortunately, it didn't offer what I wanted it to offer, which was a drop below this fair value gap and then a return. I did call this one out early in the session, but I got distracted, right? Explaining something. I forgot what I was explaining, but I totally didn't realize that this was what it was, and that was the second stage distribution. Right? The whole idea I was waiting for the entire freaking time. Right? So it happens, right? It happens. But nonetheless, oh yeah, there was also an SMT here. And the SMT here was at this fair value gap here, which was the one I pointed out on that 4-hour. Right? So yeah, probably gonna call it a day now, brother. It's been 3 hours. Everything we wanted to see happen has basically expired at this point. But what hasn't expired is the fact that we're still in line to see price dig lower into the fair value gap. We do have this previous week's low here that needs to be attacked, and it looks like it's obviously going to be attacked as the draw on liquidity. So even if you didn't have this fair value gap as the draw, you could have still used this as the draw once price broke below the midpoint of this order block here, which we also pointed out on the live call yesterday as well. We said that once it gets down below that, because nothing has changed in terms of the overall sentiment or structure, besides the fact that the Dow has fallen out of bed. These other ones haven't changed structurally, especially the NASDAQ. The S&P, I mean, you could have an argument that it has kind of changed because it's broken 2 swing lows, smashed through this fair value gap. So there's obviously 3 PD arrays that have been violated. But the NASDAQ itself didn't, right? So if you were still trying to make the argument that maybe this was going to hold this support and go higher, you could have, up until the fact that the midpoint of this order block was disrespected. And once that occurred, again, we've been targeting or wanting to favor the sell side because price was a bit choppy today and yesterday. We did map out contingency plans, but we never switched the overall direction. Like, oh, it's for sure gonna change and now go bullish. No, it was this needs to happen in order for this to continue going higher. If not, we're favoring the sells. And then everything validation, invalidation wise, which is some of the stuff that we've discussed the last couple of weeks in our calls on the Sunday calls that we've been on, talking about validation, invalidation, have all been on display. So definitely maybe when you're doing back testing or when you're observing the replay, if you want to watch some of the replay, keep that in mind, some of the stuff that we've been going over. And yeah. All right, so everything that we've discussed in this quick briefing, right? All that stuff made sense, right? 100%? All right, beautiful. Beautiful, beautiful, beautiful. But all right, brother, in that case, we will call it a day. We will go live again tomorrow, probably every day, unless I have something to do. We'll kind of flip back and forth from some YouTube stuff, and I'm going to continue to bring you guys on, some of my private students. I want you guys to also be here with me because, we're like a family here, right? So, we're all here to help each other out. So, and you guys get to show off your skills too, right? Like Nico's over here calling some stuff earlier. So, you guys are all assets, so yeah, I guess we'll call it a day. And if you guys got any questions on YouTube, definitely leave any questions in the comments. Definitely like, comment, and subscribe if you get value from the videos. And Harley, if you got questions, as always, right, send me DM. I'm always here to help you out. And I'll see you tomorrow for sure. All right, brother. Take care. All right, on time, bro. Please. I don't want you to miss the freaking value, yo. Trying to smash the markets, man. And it's a little bit reckless right now too, so it's a lot of good learning experiences, right? So definitely. But all right, my YouTube family, I'll see y'all later as well. Maybe tomorrow. If not tomorrow, I'll see y'all on Sunday. But Harley, I'm definitely going to see you tomorrow. We're going to definitely be live on Zoom breaking down some stuff, okay? All right, everybody. Take care.